It's good to have you here again. Let's proceed now to look at the fixed income and money market now. The overnight lending rate expanded by 8 basis points to 7.1% on Monday. And of course, in the absence of funding pressure on the system, trading in the Treasury bill secondary market was bearish as the average yield expanded by 2 basis points to 4%. Across the curve, the average yield contracted at the mid by 8 basis points as investors demanded the 171 Treasury debt to maturity by 19 basis point bill, but expanded at the long end due to profit taking. All right, the average yield closed flat at the short end. Similarly, the average yield was unchanged at 4.4% in the open markets operation segment. But let's get talking now. Let's bring in our guest analyst now, Mr. Abdulaziz Kuranga is macroeconomic strategies at Codros Securities Limited. Thank you for your time. We appreciate your time.
Thank you for having me.
I want us to start from the currency market. Let's get started.
Okay, so I'll be starting with the
can you hear me?
The market activities from.
Yes, can you hear me? Can you hear me, Mr. Abdulaziz?
So I think I should be starting with the currency market. So you are that.
Yeah, can you hear me? But can you hear me? Yes, I want us to start from the currency market. For instance, Naira depreciated by 0.1% to 420 Naira, 25 kobo to the US dollar at the investors and exporters window. So what's the level of pressure in the forex market in recent time? Let's start from there.
Okay, so the market activities for yesterday was largely dominated by the local players. So they were just trying to source for funds to fund their import obligations. And from the foreign investors' perspective, we understand that they were just waiting on the sidelines for the CBN's intervention yesterday. And when the CBN data came through for intervention, the CBN offered about $25 million to them at the exchange rate within a band of 444 and 453 Naira per dollar. So overall, due to the pressure from the demand side yesterday, we saw the stock rate at the investors and exporters window depreciating by 0.1% to 420.25 Naira per dollar. And over time, recently, what we've been seeing with the rate at that market is that it has gradually been depreciating a bit from about 415 to 420, and that largely reflects the death of FX supply in the system. So, for instance, despite the rally in crude oil prices, we've seen the external reserves declining constantly over time, apart from March, when the federal government issued a bond of about $1.25 billion. So apart from that, we've seen the external reserves declining due to higher petroleum subsidy as well as low crude oil production volume. So based on that, the CBN is not able to really intervene significantly in different FX segment. And again, we are also not seeing foreigners coming into the market given the challenges with FX, liquidity, overvalued currency, and the likes. So based on that, supply is currently low at the markets, but the local players, they are constantly demanding for dollars to fund their obligations.
Let me quickly jump in here. Permit me to jump in here. So what pressure, what is the implication of these if you compare the official price at the I&E window to the black market? Because as it is now, it looks like the real winners here are the guys in the black market, or maybe pair to pair.
Yes. So the issue with that is that, I think early this year, the World Bank had a report, and based on their survey, they highlighted that about 90% of manufacturers, they recourse to the parallel market since majority of the FX needs are not met at the official market. So if you have more than 90% of your FX needs going to the parallel market, then it tends to bring a lot of pressure to that space. And recall that last year, July last year, the CBN halted the sale of FX to the BDC operators. So those BDC operators now, where they are getting their dollars, that these from other countries, and they also look for companies that they receive inflows in dollars before which are the BDCs, before they can get their dollar. So the dollar supply to them is significantly low, and both genuine needs as well as speculative needs, or genuine demand for dollars as well as speculative demand for dollars, they find their way to the parallel market in search for dollars amidst the low FX supply in that market. So as
It's
a
all right.
result of that, that's why we are now getting the significant pressure at that space.
Let me get you are in the market right now. How much does it's dollar exchange for naira now? Let's start from the I&E window, of course,
So
to
at
the
the
black
IM
market.
window,
How much is it now?
So at the IM window, it is currently 420.25 naira per dollar, but at the parallel market, it is currently hovering between 605 and 610 naira per dollar.
That's 610 naira to
Yes,
$1.
exactly.
Big
So that's that.
great tax
That's
ahead of the CBN, the
yeah,
guys at the CBN there.
exactly.
But let me quickly take you on this now. Let me take you to the Treasury bill secondary market. As activities was bearish. However, average yield expanded by 2 basis points to 4%. Why do you think we'll have these mixed activities?
Yes, so the mixed activities is just like, there is an NTB auction coming tomorrow. So it's just like a situation of market participants waiting for the outcome of the meeting, given that the last auction that they did on 25th of May was like a reaction to the CBN's hiking the monetary policy rate by 150 bps. So at that auction on the 25th, we saw the yields expanding by an average of 115 bps at the auction. So I think it was that very sentiments that now entered into the secondary market, and recently now market participants are now waiting for the auction for tomorrow. So majorly the bearish sentiment we saw yesterday was majorly witnessed at the long end of the curve, and that was enough to like outweigh the buying activities that were witnessed at the belly of the curve. And at the same time, we didn't see any activity at the short end because the average yield at that space at that short end was flat yesterday.
Did just before we move on to next conversation, did the CBN's new interest rate at 13% trigger anything in the market in terms of either there is an outflow of funds from the market or inflow of funds?
It didn't really. Where we saw the initial impact of that CBN's reaction of the CBN's increase in rates was at the NTB market, where the auction rates closed higher. But even at that, at the OMO auction, the last auction that the CBN did last week, all the average stock rates closed flat. At the short end, the average stock rate was unchanged at 7%. Mid segment, it was unchanged at about 8.5%, and at the long end, it was also unchanged at 10.1%. So majorly for now, since the past 2 weeks, where we've seen the high reaction or the significant reaction was at the primary market auction of the NTB space, where we saw the yields increasing significantly.
Okay, just before I allow you to go, Mr. Korenga, the bond secondary market traded quietly. Yes. Looking at the activities in the bond market, it traded quietly as the average yield was unchanged at 11.1%. So across the benchmark curve, the average yield, paired at the short end. Yes. So what do you think was responsible for these? Break it down for us, and what is likely to change, and also give us your outlook for the day and, of course, the week ahead.
Okay. So in the bond space, the activities are largely influenced by when you see probably liquidity. So when we have excess liquidity in the system, so it tends to lower yields in the space, and also dependence on the federal government's borrowing plans. So based on what we've seen so far, so only the short end of the curve we were only able to see some kind of slightly bullish sentiment at that short end of the curve, as the investors only demanded for the March 2025 instrument. And as you rightly said, the average yield was just flat at the mid and long segment, so meaning there was relatively no activity at that space. But going over into the medium term or the short to medium term, our expectation is for the yields to increase. So unlike the first 3 months of the year when we saw increased liquidity from matured instruments as well as some bond coupon payments. So over going forward into the rest of the year, we are not really expecting large amount of liquidity in the system, and the federal government would also stop the implementation of the 2021 capital budget implementation on the 31st of May, which they've already stopped. So which means from June downwards into the year, they will begin the implementation of the 2022 capital expenditure components of the budget. So that points that they are likely to increase domestic borrowing. Apart from that, the Minister of Finance has also come out to say that the $950 million that they were planning to raise, they are no longer raising it due to the unfavorable market conditions. Yields are rising significantly in the international market. So based on that, our expectation is that they will try to bring, instead of, since they are no more borrowing this $950 million at the Eurobond space, then definitely they will bring them to be the domestic market. So that's
because I was going to come in there. That, well, I mean, the government has been borrowing since it came. Especially this administration has been borrowing. Because when you said there was no activity, I was going to ask you, how come how come the government has continued to borrow? Does it mean that it has not come to the domestic market at all? I mean, so I was going to ask you the impact and change that will make. But of course, our time is fast spent. We'll have to leave it there. Thank you so much, Mr. Abdulaziz Kuranga, Macroeconomic Strategies at Codros Securities Limited. We appreciate your time on Business Breakfast. We'll be having you from time to time again on the program. Well, you're still watching Business Breakfast coming to you live from our studios here. We'll take a moment now, and after the break, Nigerians' electronic utility bills rose by 189.5 billion naira in the first 4 months of 2019 to 923.24 billion in the first quarter of 2022.